All right, everyone. I'm gonna pull up quickly the chat, get that placed over there. Sorry about that. But yeah, definitely glad to be here with everybody. Obviously, as our last presenter just said, the markets are starting to get a little bit dicey here with the volatility. It's something to kind of be expected. We're starting to see some short-term indicators. We have a short-term composite indicator that I follow. We saw that was kind of maxed out the other day. There's definitely the potential that, hey, maybe we just get these short pullbacks and then we get a little bit more of a thrust. But we are heading into June OPEX. Traditionally, June options expiration week starts to become a little bit rocky. And we typically kind of see that carry over until about the beginning of July. It's something I've talked about many, many times, in articles and presentations. You can search back on our site in Schaefer's, and I typically fill in for our director of research around this time. He takes a vacation, and it's usually a very similar theme on that aspect, right? July is extremely bullish. It's been the most bullish month in recent years. But the reason why you kind of get this rockiness right before that month is because, first off, a lot of companies are going into buyback blackouts. We now also have some geopolitical risk on the horizon. And then secondly, it's just that whole summer doldrums kind of theme that people play, out that say, hey, sell in May, go away. So you sometimes have a little less liquidity in the markets in June. Um, what we're seeing now is we are seeing a little bit of a pullback. We broke this 10-day on the S&P 500, and really kind of the big test is going to be down here, I think, right? 595, it will be the big test in my opinion, and this is where we kind of want to hold if we're going to see, hey, we're going to come back up, maybe get that extreme overbought level up around 608, 613 here into these prior highs. So this is the level to be watching. Below 595, you start opening up some floodgates to lower levels with the 200-day moving average down at 580, and that 50-day still way down around 570 at year-to-date anchored VWAP. So you have that there, or you have that there as well. So, these are just things you're going to want to keep on your radar. And then this open kind of gap from the pre-election close that I had over here from a previous, presentation with, ask your chart. That also aligns kind of with that 200-day moving average right here. So that's another level. If we do break down, that I would kind of watch. Hey, this 200-day likes to hold. The one thing is statistically, if we get these big flushes in the market, we rebound about 50% of it. So we take back the 50% fib level on it, they often continue to carry on. So retesting the lows, barring anything cataclysmic, I don't even think a war with Iran necessarily would provide the retest of the lows. It would definitely provide volatility, maybe a test back down in this 50-day in these VWAPs here, but it's really rare for that to happen. So it's going to have to be something maybe bigger, and maybe something is produced bigger from the conflict that can do it. But typically, you know, the data supports markets still will go higher in the longer term from here. So yes, we could have some short-term volatility. Definitely something to be aware of, and have some short opportunities here probably coming up. Now, let's see if anybody has any tickers they want to throw out there. I can take those and we'll start looking at them right away. If not, we will start just pulling some up here temporarily for all of us to look at. One name I've been looking at, very recently was Datadog here. It's at a, kind of an important level. We're seeing it take out the 200-day moving average. It came off this anchored VWAP, which is year to date, and you got the 10 and 20-day kind of just trending right with it, right? So pretty important pivot level. Back in the end of 2024, it held as support, and it's coming off of the 1-year volume point of control level as well. So, I think, momentum, if this market does kind of rebound a little bit here, maybe the headlines are just a little bit of a short-term fake out, the Datadog can hold up, and then we can go up here and kind of retest these gap levels. So first level I'd be looking at would be about 137. And then if it can get into the gap, obviously we can fill this gap all the way up to about 145 here as well. So I do see there is a ticker in there, so that is great. we'll take a look at that. Let's go to Oxy. And we can pull up option configurations here, and I can let you know the levels on those as well. That way we can kind of have an understanding of where we are within the market through an options lens. And let me just clear out my OI config and we will start looking. All right. So Oxy, obviously we got through some pretty big resistance here. This 45 level was pretty big. As you can see, we kind of had one little stall here right before the breakout and then a previous stall. And these are coming off of the March 2025 and the December 2024 lows. We're back now above that. Not all in the clear, still below the declining 200-day moving average. You still have a volume point of control up here at $50. But it easily could go up there, test that $50 level. You'll see this was a prior support level as well. So 49.91, that rings a bell for going to $50, in my opinion. I always have to give it a little give and take. And then, if we do for some reason get through that, I actually kind of like to look at it here at this previous gap. You get through 50, you're going to probably go to 53. You're going to be trying to reestablish a new bull pattern here. And that's the big thing. Is oil going to continue to go on these headlines? You're going to see some volatility in it. I don't know if oil gets back to, those previous highs that we saw back in the last crisis during when Russia invaded Ukraine. But I think we still have some momentum here. I was actually just looking at a Exxon short, and the thing that scared me out of it, last week was literally the fact that headline-driven news can push that higher than what I'm looking at. All I config was, it was at peak call. I thought, hey, maybe we get a pullback on it, but the fact of the matter is you get through that peak call level, price is going to rip pretty hard. So those are the nearest levels, and then after that, you're going to have this big kind of consolidation area here when we pull it back onto the weekly. And this is where you'll be looking at. So 56, 55, as you can see here, multiple points. So these are your levels if you're bullish on Oxy, to continue looking at that. Let's kind of just take a quick look here at Oxy's OI config. I'm going to take out this week's OPEX because we're going to want to see if this move can kind of take a bigger move. So yes, $50 right here. That's peak call in the near future here in the front 3 months. You're going to either find resistance at this level, or you're going to find that it breaks out, and then you can start taking out these levels fairly quickly. So if you're in this trade it up to 50, start getting a little leery there, maybe take some off, peel it off there, because these big open interest levels often are points of support and resistance that aren't really defined on the charts as much. All right, crowd. Crowd recently broke out, if I remember. So here on the weekly, looks great. Let's bring it down to the daily. Still looks great. All right, so if you're looking to get into the position at all, if you think we get some volatility, start looking back around 455 to get back into this trade. I know it'll be below the 20-day moving average, but that would be a level I think you would hold. You're going to see this 50-day rising here, so you'd be able to get into it. Until then, it's pretty bullish. If you're already in it, you're sitting pretty well. If it takes out this high, this wick high, which it looks like it has potential even today, but you're sitting right there. Once it takes out that wick high, expect another push in CrowdStrike. So you can bring it down to the 30-minute. You can see here, it's just sitting there, just rejected it. So if you're a short-term trader, maybe you take an opportunity here, buy some puts. If we think we're going to kind of trader into the close or anything like that, you could probably get a move back to about 488. But you can see here, it's a big point. So if you take out this level, you're probably going to surge higher. So there you go for crowd. And OI config for anything that's going out into the future here. The biggest levels for crowd are 500 and 520. We are past OI balance, which was around 480. So that makes a lot of sense, right? 480, you got the 10-day moving average right around there. And these prior highs from June. And then looks like the put stack starts around 450. So right around this 450 five level, that's a solid level to start thinking, hey, support's going to come in. You have a put stack starting. It flips to that. So if you break through that level, there's a chance that you run that put stack, later on in the future down to 400 here in the summer. But so that's kind of a level to be defined. All right. Oxy to 50. Yeah. Yeah. I mean, very well. That call level there could literally, since it got through that recent level, could pull price right up to that 50 level here really quickly. And that's again, that's your pivot. So you look to see if it gets through it or rejection. Berkshire B. All right. There we go. All right. Berkshire down at the 200-day moving average. That doesn't look so bad here. If you're looking for something that's a little more defensive to rotate into, um, Berkshire is probably not a bad situation to be in here. You're right at these prior highs on September 2024 and November 2024. You can see the last time it broke it, you got a violent move to that 200 day and it quickly recovered. I mean, very next day, you're back above it. So this is a critical kind of pivot level. You're through it this more right now, but I would look for this 200 day for confirmation if you're trying to short. It's a little long on the tooth on the short. You can see the moving average is rolling over. If you are probably looking to short, you either need to see this 200-day moving average break. Otherwise, on the long side, you want to try long, get back above 485. I think you got a chance here. You have defined risk at least, right? So you know that, hey, this 200-day moving average can be my defined risk point, and we can make sure that we, limit our losses here, and then you have the upside. Obviously you have a lot to work through. You got the 10-day coming down, it's following that pretty well. 20 days is always kind of a tough moving average where you're going to see some kind of, little bit of a stall at. And then you have the year-to-date anchored VWAP level. So this is where the majority of people are priced in the market from buying shares this year. And then you have a falling 50-day as well. Not, the end of the world. Pick your spots. This is a nice big pullback level. 450 after June OPEX is the peak put level. So that is all the way down here. Funny kind of fitting right by, volume point of control in the 1 year. And then 500 is your peak call level right now. So funny that that's right at year-to-date anchored VWAP, right? So it's kind of a level that, hey, you could take a shot here back above 485, probably try to trade back up to that 500 level, see how it does there, take some off, and then control your risk if you're looking at the long side. All right, more tickers, send them in. Okay, CRWV. All right, CRWV. This was a classic case, right? Of an IPO earnings trade. This is the biggest thing that I saw was, and let's just kind of zoom in on this. So 62 was its IPO level. And we saw kind of how that worked right on earnings. So if we zoom in over here, I know it's a 30-minute chart. But this is one of the things that we try to follow at Schaefer's a lot is IPO levels and multiples of them. There's obviously much more important ones like 2x IPO, 5x IPO, things like that. But these are levels that you think, hey, they can be kind of this abstract support resistance level. And they typically, people are very aware of them, right? So once like Robinhood got back through its IPO level, it's, surged. They have a lot of other catalysts going for it, but it's something that you kind of see that, hey, it got up there, it stalled a little bit. People are aware of this. You can see here, CRWV, though, was a real new issue, obviously. We know NVIDIA backs it. It's a company there in the AI space that literally kind of has a lot of the backbone into the infrastructure. But on earnings, it popped. You kind of got this pullback right to this near the 62 level. That was kind of your level here, right? 62, you can see just held. And since then, CoreWeave has been on a tear. So it really acted as a beautiful support level on that earnings. So now let's just look, where are we now on this trade? And we'll pull this out. We're kind of just been in this gamma squeeze since then, right? you got back through 62, you cleared those previous highs, and you're moving now a lot bigger, right? So it's literally kind of just taking on this 10-day moving average. For me, that would be the risk off signal if you're in this. If it closes below this 10-day and you did get one little close there, kind of to shake out maybe, weak bulls on that. But that 10-day moving average is going to be a pretty big level. You can see it's kind of been smooth against it, and it really wants to stay above it. So, we're back above, all-time highs here now. Very short issuance state. There isn't a lot of price history. As long as it remains above 165 there, 166, uh, you're going to want to remain long this. I mean, it's just something you got to hold on to, and, expect that it's going to continue on, as you can see here, even in the face of volatility today, with, the SPY itself, the S&P 500 down 80 basis points, CoreWeave is still higher. So until we start seeing some type of, rounding out here and breaking of this 10-day moving average, you're probably going to want to stay in this trade if you're in it. If you're new to trading it, my suggestion is to keep things short term right now with, potential negative catalysts here. You can easily, like I said, use this 166 level as your stop if you wanted to get into it. You say, hey, I think this is going to be, a nice trade, that's going to go out to, a couple weeks. Use 166. Use this prior high as a level to control your risk. And if it does dip back down, start looking into, levels down here. You have the 200-day, and I would probably look at 143. So if you want to take a second stab at it, this 143 level seems pretty decent to take a second stab at it if you got stopped out at that 165 level. So 144, 143. I think there's a lot of confluence there. So if something crazy happens tomorrow, or even into the close, you get stopped out, look down here. You can use options to define your risk. That way you're not taking on a huge stock position, and who knows what's going to happen tomorrow. The worst you can lose is the premium that you have. Okta. All right. Okta is a name I looked at recently, and it's not a name that I hate. It's just a name that I think might not be ready. You can see here, those are previous recommendations from our firm. Okta actually did pretty well on that recommendation. But the one big level for me was this large 100 strike call level and open interest. So we really want to get a back above that. Plus, it's a round century number. So since it's like a round century number, it's very psychological to traders. Whether they say it or not, it shouldn't have any meaning, but in your head, the round 100 level does have a meaning. When you do see a push through it, as you can see, a lot of the times you might get some stalling action, but once you get that push and it confirms through, you often get, 10, 20 points on pushes like this. So I think it needs to retake this 100 level. If it retakes this 100 level, I think you're in a position here then to try to trade it up to, that 20 or that 50-day moving average. You do have this gap up here. I think when it does come up here, you're going to see a little bit of a stall. But if you can get into the gap, if you're thinking longer term, take some off at that level, wait to see if it gets back into the gap. Maybe at that point, you would want to use like 105, 104 here with this year-to-date anchor VWAP as your stop. If you already took your profits up here at this 108 level. So for me, needs to be back above 100 to get long. If it remains below, you do have some bearish potential here. Where I'd be kind of looking for it would be a pushback down kind of to these lows around 92, or this 200-day moving average around 91.50. But I do like it long. I do think it's coming out of a longer term base. I do like this pattern, right? You have this nice kind of basing cup pattern here. But again, you're going to have some risk here to about, maybe you get back to 115. Again, that's going to be another spot. You're going to look for some resistance. You get back through 115, obviously then you're going to have a chance here to get up to about 127. Tesla's all-time high. So just be careful with it. Make sure that it closes over 100 before you want to take a stab at it from the long side. Boeing, a name that was on my watch list last week too. I I kind of liked it when it came off of this level here. I think you got a little bit of stalling action, so it's a little tough with options right here. But if you want to kind of start legging into it with stock and shares, you definitely can use it down to about 195. That's the reason why, I didn't actually trade it in one of our weekly newsletters, is because I just thought, hey, you can still have some consolidation here. You have this negative news, and you got that pop earlier today on news that news out of India, but it really still has a lot of, kind of negative headwinds here. So you got this gap level, kind of went back up to the gap, 206.39. As you can see, you didn't even make it fully back there, 205.50. Now you have the 10-day and the 20-day coming down. So we're going to hopefully see this come pull back down. Where I'd take a stab at this maybe is if you get a flush out back to that 195 level. You can see how that was bought up really quickly. This was really kind of a breakout level, was this 195 and 191 level here. So that's where I'd be looking at to buy Boeing if I want to take a potential. I mean, you can just see 195, so many areas here. Previous base, finally broke out, broke higher, finally got that gap move and go. See here, comes up, retested after it gaps down, comes back up to 195. That's where the failure was, went into the chop, came back up, tested 195, came back down. So you can see 195 and this 191 kind of 50, 190 level is really a big level. So that's where I'd be looking to buy into. Marvell. And then you have a defined stop. Again, so if you break below 190 and that 50-day moving average, you're out. Don't try to hold on to it. Just get out. Wait till it retakes those levels then. Marvell. All right. Marvell. Marvell's a tricky one always, right? Because it likes to chop around a lot. But then all of a sudden you get these explosive moves out of Marvell. So usually a better premium seller for me than an option buyer. I have, traded it as a long premium. I actually traded, it was puts, traded against this high, if I remember correctly, into one of our weekly newsletters. Got to push higher, scared me. Thought, hey, we're not going to make targets on this. Then we got this move. So it worked out beautifully, but that was a very short-term trade against prior high. There was a lot of call open interest there. So I thought, hey, you could maybe get a volatile move. It does that, in the short term, but long term, it is a little bit choppy unless you get big breakouts. So for Marvell, I would really look at least clearing, at least kind of clearing, 70. Honestly, just to be safe on this, because it is so choppy, 74, 75. If you really want to make sure you're in the all clear, wait till it takes out this prior high and gets into the gap. You have this year-to-date anchored VWAP right there. So if you're looking for a momentum trade, that's how I would look at it. If you really want in now, really try to play it against, these prior highs, right? It, kind of can look down here. You have kind of 66 as your level, 60, 66, yeah, 66, 67. You have the 20-day moving average. Let's just see what it looks like on the 30. Yeah, and it actually doesn't even look that great there. So, that's how I would play it if you need to get into it today. But otherwise, I would wait till you clear 75. 75 also could be a good spot, the 74, 75 area, good spot to hit a short on the short term. Kava. Oh, Terror. All right, I got 4 minutes left, so I'll try to get through Teradyne quickly and Kava. Teradyne, very similar, right? For Teradyne, yeah, I would look at it and say, hey, we're so close to this. If you want to do a short-term trade up to it, you can use these 10 days, 20 days to kind of, get in there and trade up to it. Use this gap and this prior high over here. So you kind of have, you could use about 86, right? 86 if you wanted to try a trade into today's kind of news. But don't expect anything more than $92 here. You have this year-to-date anchor VWAP. You have, prior resistance. If you want to take a short-term trade, if you want something longer term, look for it to break out above 92, 92, 92 and a half there. That way you can get a move maybe up to 200-day moving average. You also have this prior resistance from the gap back in March 2025. So I would expect the 200-day moving average will get down there. So you could look from 92 to about 102.50. And Kava, honestly, if you want to take a long right here, you have prior lows, August 2024, March 2025, April 2025. This is a level you could just look at and say, hey, let's try this. You're on a DeMark Niner. I did trade this not that long ago. Let's get these out of the way. Um, but yes, you're going against the moving averages, but you're going against a huge prior low level that has held. Defined risk. Now if you break and hold below, the 72 level here, you're gonna just need to get out of the position. If not, your risk to the upside, I mean, you have the 50-day there, you have the 20-day there. But if you're just looking at simply price, I mean, you're gonna get a move up to about 93, $95. That's not a bad move. So I don't mind this right here. Taking Kava long, very defined, well-defined risk. So $75, very well defined against 72.50. Go for it. MU, final one, it looks like, unless we get another quick one in. MU, so it's kind of been famously a great premium seller. I'm still actually in like a credit spread of I traded it somewhere down here, and I believe it was like the 62.5, 60 spread. Just sold some premium on it after it regained this 20-day moving average. My concern was, hey, we have $84 here. It could run into resistance, but it just took off. It also took out major resistance here. So you had all these kind of points of rejection. I know this might be the anchored VWAP level right there. Let's see if I can pull it up quick. I think it was off of this high. Might be wrong. Uh, Maybe it was this high. Yeah, so you can see how at point of rejection here on this anchored VWAP from this outside move, just kept kind of, it get through it and it pull back. So you're in the all clear here above 113. This is a big base kind of breakout. Use 113 if you are in it as your kind of stop level. You have the 10-day moving average. If you're looking to get in it, that'd be the level I'd look. Hey, you get this pullback to about 113, 20-day moving average is probably getting pretty close there. You can use that level as your entry point. Otherwise, right now, if you've been in it, say maybe you took it earlier in the year, earlier here on this breakout or something, definitely look at it as, hey, maybe take some profits, but use this 113 maybe as your stop now. But yeah, pull back on MU to 113, definitely a good spot. Now I know we do have the next presenter up, so thank you guys very much for having me. Feel free to reach out anytime over to Schaefer's, and we'd love to trade alongside you.